Welcome back. Let's check markets here. Futures indicating a higher opening for the broader averages today. Dow Industrial's up 43 points right now. S&P 500 and the NASDAQ also positive. Earnings season is winding down. My next guest says fundamentals will take a back seat for investors over the coming next few weeks, which could lead to some volatility. Joining us right now is Federated Investors Chief Equity Market Strategist Phil Orlando. Phil, it's great to see you this morning.
Good morning. Thanks for having me back.
So the next couple of weeks, you're watching closely.
So we've had a phenomenal run here. All right, stocks are up about 12.5%. From the beginning of April through this week. All right, we hit a new all-time high. The technicians are telling us we're into like a double top scenario. What we're concerned about is the fundamental vacuum. All right, earnings season is done. They were outstanding, up 25% year over year.
Really good numbers.
Second quarter GDP up 4.1%. Hilsey was talking about that a moment ago. The numbers are phenomenal. But for the next 6 or 8 weeks, we're going to be sort of in a vacuum period. And then I think things other than fundamentals sort of take charge.
Phil, the first data point to come out the first week of September is going to be the jobs number. Is that something that could spook the markets or even, to Gary's bullish point, propel it further higher?
So yesterday we got the survey week claims number for the month of August. The numbers were terrific. But to your point, for a number of reasons, the August non-farm payroll number at flash tends to be very quirky, and it tends to miss by like 50K. So if in 2 weeks we get a number that's, you know, $1.25, $1.50 instead of 200 plus, that may rock the market. Now that number will be revised back to where it should be over the next couple of months, but the flash could be a little disappointing.
Phil, I understand you're always going to go through a period where you're a little worried. I wake up every day in the market.
You're always worried.
And I'm worried about something. But you would say, I think, that the markets are probably going to be higher a year from now, right?
I would argue the markets are going to be higher at the end of this year. We've got a 3,100 call the end of this year, 3,500 at the end of
Then I'm not going to worry about the next few weeks.
Right, exactly. So wouldn't you say then anyone should be buying right now if they're going to be higher?
If you're a long-term player, and I don't care about the next month or two, I care about the next year or two, then you should be invested. But if you're a tactical short-term investor, we think the potential is we could see, you know, a 5%.
That's for traders, though, right?
Well, and that's exactly the point I'm making. This is a cautious, tactical, near-term call. We would use it as a buying opportunity.
On any dip, you would be buying right now.
Absolutely.
But then there's the Fed, Dagan. You got Jay Powell's first speech at Jackson Hole this morning. He's speaking at 10 a.m. in Jackson Hole. Kansas City Fed President Esther George's response on the president's criticism of the Fed, she gave it to us yesterday.
Expressions of angst at a time when there are higher interest rates is not unique to this administration. Congress understood this tension might exist between a central bank that was responsible for the money supply and those that have other angles in the economy. And so they put important firewalls in place that would allow an institution like the Fed to keep its focus on the public interest.
They could still blow it. They could still blow it.
So that's why, you know, to avoid being nervous when you get up in the morning, that's why you allocate your capital properly, that you have a little bit of ballast in your portfolio. But in terms of interest rates are still exceptionally low, I worry about them reducing the balance sheet and the impact on all asset prices. But it looks like that they have not been or are not being as aggressive as reducing that balance sheet as we even expected at the beginning of this year.
Well,
right?
That'll be
and John Hilsenrath's been talking about this.
This will be Jay Powell's first Jackson Hole speech. Is he going to give us some sense of what is the pace of rate hikes? What is the pace of the balance sheet shrinkage? I think one interesting wild card could be Trump's criticism of the Fed recently. I'm not thrilled with what the Fed is doing.
Right.
If I'm the Fed and I'm trying to establish a sense of independence and backbone, does that force me to give them that extra if you're thinking one hike and maybe a second in the second half of the year, maybe the tie goes to the runner here and we get that second hike just to show that you're independent. So the president may have shot himself in the foot here by sort of coming out publicly and making those kind of comments.
By the way, I do think that the Fed could blow it because 3 rate hikes in a year I feel is good because the economy is strengthening. But 4?
Well, and the question is you look at the dot plots, 3 hikes in 19, 2 more hikes in 20. We think that's excessive. That when the dust settles a couple of years from now, the Fed will not have done what the dot plots are suggesting that we'll have done. But what's going to happen. Will they over-tighten? Will they push the economy into 2021 kind of recession with two? We don't know that right now, and maybe today we'll get some clues on that.
By the way, you got to be impressed by this retail sector, right? Look at the last couple of weeks on the retail earnings. Macy's, Walmart, go down the list. We've been really seeing strength in terms of the consumer.
Comparable store sales and, more importantly, foot traffic. That's the really impressive thing.
Well,
People getting out from their computer and
was it
shopping.
Target or Walmart best same-store sales increase in like 10 years?
Yeah.
10 years?
Walmart, it was both Walmart and Target. Target had the best results in more than a decade, and Walmart has best quarterly sales in
look,
over a decade.
if you want to retail, TJ Maxx.
Yeah.
TJ Maxx is killing it.
You know,
that's all my wife, by the way.
Your wife and me.
Check his credit card.
No, I never thought that the retail sector, that the brick and mortar stores were dead, ever. I just thought it's the combination of a better shopping experience, knowing what those customers want in the stores based on their activity on their websites. And I like seeing people out shopping just simply because it sends a sign of optimism. People are confident. They're willing to get out there with their family and do something.
Yeah,
very strong start to back to school. There is an 80% plus correlation between strong back to school and strong Christmas. So that gives us a good fundamental consumer backdrop in the second half. Retail sales.
That's interesting.
The consumer is 70% of GDP. So that suggests that the second half GDP numbers ought to be 3% plus.
All right, so you're bullish, but you're expecting volatility.
I think there could be some volatility next 6 weeks. Any weakness, use it as a buying opportunity.
All right, Phil, it's great to see you.
Thank you.
Thank you so much.